Hello, and welcome to Financial Management. We are approaching the end of 1030. So this week we are again at 1030, which is accounting cycle 2. We are at project 3 now, closing entries. In project 3, there are two training rooms, training room 1 and training room 2. In training room 1, we talk about what is a closing entry. So a closing entry, I've also included this link here, is basically a series of transactions that you close out or that you use to close out the temporary accounts. So remember, those temporary accounts are revenue account and expense accounts. And we transfer it to an account called income summary so that we can properly calculate the net income for the period. So this website, which I took from freshbooks.com, talks about how to record a closing entry. We're going to need to transfer the revenue from all those revenue temporary accounts into the income summary account. Then we're going to transfer the expenses into the income summary account. From there, we can calculate the profit or loss for that period, the month, quarter, or year. And then we'll transfer that balance by closing out the income summary account and transferring the balance to owner's equity. And then this webpage has a bunch of examples on how to transfer those things, and we'll work through our training room together. So in this page, it talks about Gurpreet's temporary accounts. It shows you the worksheet that he had for the year ending in March. And then there are some T accounts that shows you how to move those. So we see we have here snow shoveling fees of $4,675 and a lawn care fee of $1,890. These are all credit balances in our temporary account. So to move to sort of cancel out those credit entries, we need to put in a balance entry, right? So the balance, is in the credit column. So to counteract that, we need to put in a debit entry. And remember, in accounting, whenever you put in a debit entry, you have to put in a credit entry. And so then we have to credit the income summary account, all right? And then we can close out expenses. We see that we have expenses called snowblower expense, truck expense, miscellaneous expense, and lawn care equipment expense. Those are all have a debit balance in the ledger. So then we need to credit those things in our account, and then at the same time we need to debit the income summary account. Once we transferred everything to the income summary account, we can calculate the final balance in income summary and then transfer that income summary to the capital. Also, we have to close up the drawing account by doing the opposite reaction, and then we'll have closed all of those temporary accounts, and then you can do a trial balance to make sure everything is still balanced, and then you have calculated the income, close the temporary accounts, and you're good to go. All right, so let's begin by looking at the practice on Project 3, Training Room 1, page 3. We are going to look at cost, moving, and storage. We're given this worksheet here. It's a little bit small. Let's see if we can make it bigger. Not really, but not really at all. So we're going to have here a general journal template to journalize those closing entries. And then next training room, we will enter them into our ledger. So let's bring out our general journal. Okay. All right. So this is the end of the period, December 31st of the year 2025, December, and these are all on December 31st. So we're going to move our revenue accounts first. So here we see that we have sales of $200 $2,000, and this is a credit in our credit balance in our sales account. So, right, so we're going to do the opposite then. So in sales, we're then going to debit $2,000. That will counteract the credit of $2,000, and then that will bring our sales balance to zero. But when we debit sales, we have to credit something else. And we're going to credit income summary for $2,000. And that should be a little bit indented. Okay, so that's the first entry, which just closed out sales. Next, we're going to close out advertising expenses as well as truck expenses. We're going to do both of these sort of at the same time. And then these expense accounts currently have a debit balance. So to close it out, we need to credit those accounts. So we're going to credit advertising expenses, advertising expense, and that is in the amount of $50. And then we have to do a truck expense. Right now it has a debit balance, so we need to put in a credit entry of $100. And all that, so we just credited our system with $150. So then to balance it out, we have to debit something else. What are we going to debit? We're going to debit income summary. All right. So those we are going to align a little bit. Okay. So we've now moved those amounts, $2,000 and $150 into income summary. So we can then determine, oh yes, we took in $2,000, but we spent $150. So our net income is $1,850. So that is our net income. So we have that is in the a credit balance, net income. So to move that, to close that net income summary account, we have to debit it with amount of $1,850. And what do we credit then? Well, we're going to move that money to our capital account. And our capital account here is Mile Popoff Capital. So Miles Popoff Capital. Okay. All right. And we also see that there was a drawing account. So Miles took out $200 from his business during the year to have lunch or whatever, or take out clients. So then we need to close out that drawing account. Currently it has a debit balance. So then we need to credit it. So we're going to credit Miles Popoff drawing. And we're going to Miles Popoff Capital. So to close out that $200 debit drawing account, we need to put in a credit entry. And whenever we put in a credit entry, we have to debit something else. In this case, it's going to be our capital account. Okay, so then there you have it. We've just closed out our sales account, our two advertising accounts, and then from that we determine our income summary, and then we have now our transfer that income summary into capital. We've also closed off our drawing account by making another transaction that equals up the balance, and then also don't forget the opposing debit entry into the capital account. Okay, questions and comments on that? All right, no questions there. Okay, so that was training room 1, time to practice. On page 4, it is time for your assignment, and you're going to close out the entries for Jerry's steam cleaning service for year ending June 30th of this year, 2025. And he has, let's see here, he has income, cleaning income, so 1 revenue account, 3 expense accounts, and he also has a drawing account. All right. So remember, transfer those balances into income summary and then close out income summary by transferring it into capital. All right. There's additional assignments. If you like, you don't have to do it. And then that's the end of this training room. So the second training room in Project 3 talks about posting those entries, right? We just created a whole bunch of journal entries to close out those temporary accounts. Now we have to post them. It's just like before. We look at our general ledger and then we put those transactions into our ledger, okay, or general journal, and then put those transactions into our ledger. This video here that's embedded goes over how Gurpreet posts those closing entries. And there are some answers. And then on the next page, we're going to work through some closing transactions. All right. So in this situation, we are in this practice, we have a ledger. Okay, that's sort of pre-filled for you with Duke Farrell's accounts, as well as a journal of closing entries. Our job here is to post these closing entries into our ledger and then finish it off with our post references. And then once we post them, you should do a trial balance. I'm going to skip this step for now because you've done trial balance just recently. Okay. All right. So let's arrange this so that I can see. And then we'll arrange this over here. Okay. All right. Advertising sales. All right. So sales is a revenue account. So on, don't forget to change the date. On December 31st, we're going to put in a debit entry of $1,000. So $1,000. So then it had a credit of $1,000. Now we're going to debit $1,000. So then there's a zero balance. And we don't need to indicate whether this is a credit or a debit because zero is zero. All right. So where did this come from? All right. This came from General Journal, page 9. So this goes as G9. All right. So we posted it into account 4001. We have to go back into sales and put in 4001 to let us know that we've posted that entry. Okay. The second part of that transaction is income summary, credit of $1,000. So let's see here. Income summary. This is on December 31st. And this is on journal G9, journal page G9. It's a credit of $1,000. So now we have a $1,000 balance. This is account 3010. So we put in 3010. Okay. Next, income summary. We're going to debit it for $1,350. So 31st, again, page G9 of our journal, debit of $1,350. And now we need to do some math, right? We had a credit balance of $1,000. We're going to add debit of $1,350. So now our new balance is $350 to the debit side. So, this is like integers and math, right? Adding and subtracting negative numbers. So this was on account 3010. Next, student expense, credit $850. So expenses, studio expense, change the date, December 31st. This was on page G9. We're going to credit it for $850. And then we had a debit balance of $850. Now we're adding a transaction of $850 credit. So then there's a zero balance. So this was account 5001. Next, we're going to credit studio expense for 500. December 31st, so G9, credit for 500 and zero balance. And then that was on account 5005. Okay. Duke Farrell Capital, we're going to debit $350. So go back to equity tab. This is 2025. December 31st. This is on page G9 of our journal. We're debiting $350. So now we gotta do some math. Bring out our calculator. So it's 24,381.31 credit. So then we'll subtract a debit entry 24,031. 24,031.31. Okay. All right. Oh, you notice why we do this? Because we have we spent we only had sales of $1,000 and we have expenses of $1,350. We were losing money, so we're gonna subtract out Duke Carroll's capital. His capital went down by $350, unfortunately. So his business lost money. So this was on account 3001. Income summary, we're going to credit $350. So income summary, G9, credit 350, and that brings us to a balance of 0. And that was on account of 3010. All right, a couple more to go. Duke Farrell Capital, debit of $4,000. So Duke took out $4,000 from his business to, I don't know, buy lunch or whatever. So $4,000. Whoops, forgot to do this. And now we're going to subtract another $4,000 from his capital for Duke. So now it's $20,031.31. This is account 3001. And then lastly, we're going to credit his drawing account. Change the date. December 31st. G9, we're going to credit $4,000 to bring us to a balance of 0. And that was account 3005. Okay, so that's posting the closing entries. And we have our ledger. And the last thing that you need to do, but I'm not going to do it with you, is to do a trial balance, right? Remember, a trial balance is when you take the balance, the final balance of all the accounts and put it onto one sheet, add up all the debits, add up all the credits, and hopefully the sum of the debits add up to the sum of the credits, okay? So if you have any questions, please send me a private discussion message.